Hello everybody, welcome back to my channel Trading Secrets. This channel is for entertainment purposes only. For those of you who do not know, my name is Ali. I have over 20 years experience teaching accounting, economics, business and law. Through this channel I'll be providing some stock analysis and a quick update on the $1 Million Challenge. So if anybody's not aware of this is a journey of investment of $1,000 to a return of $1 million over a period of 3 years using a strategy called compound return investing. So the objective is try to get 201 trades, each with an average return of 3.5%. It's not 201 consecutive trades, we do take into account losses. So for further details about how to join us for less than $9 a month, information is available in the description below. In today's video, I'm going to be delving a little bit deeper into the SEC case against Meta, John Berta and George Palikaros. We're also going to be looking at Ari Rubenstein, who has apparently been found, and also at a key meeting of the SEC with Pete Sessions. And we're also going to be looking at earnings from Micron, so stay tuned for that. And before we get started, let's have a look at what's happening in the market. So shout out here to Stock Market News, who stated the Fed's Bostic is stated that the inflation is moving in the right direction and an interest rate cut is likely in the fourth quarter of 2024. So overall, in terms of the markets today, the S&P 500 and Nasdaq ended higher. The VIX did fall, and investors are now bracing for the PCE inflation data, which is expected very, very soon. And in terms of news with regard to Google, we can see here Google have announced significant advancements in models and enterprise platform capabilities with Vertex AI solutions, as according to Bloomberg. So let's now have a look at the news with regard to Microsoft earnings. So in terms of the earnings overall summary, earnings per share was a significant beat at 62 cents versus an estimated 53 cents. Sales was also a beat at 6.8 billion versus 6.7 billion. So overall great news in terms of earnings. However, the share price did not react positively. And there was a dip, and I think there still is a dip, and we can see here from investing.com, Micron are saying that bandwidth memory sold out throughout 2025, and they are looking at the race for AI will drive significant growth for DRAM and NAND. So what we can see here from investing.com also, it states here that analysts have raised the numbers on Micron stock and urging investors to buy the dip. Do you agree? Well, I certainly agree, and I think potentially a great long-term hold. So in terms of the allegations of the SEC against Meta and John Berta and George Palikaros, we did look at these in the previous video, including reactions from John Berta and George Palikaros. So go ahead and check out the previous video. Now the SEC have posted with regard to these allegations earlier, and what they stated is that they filed charges against Meta Materials, including the former CEOs John Berta and George Palikaros, and the company have agreed to settle the charges whilst the litigation against Berta and Palikaros will proceed. So obviously they are not agreeing to settle, which I think is positive. And what I have posted here is that the SEC certainly seems to have history with the Atlas traders. That was a significant loss for the SEC. They also have history with OSTK, which is a very, very similar setup, and history comparing to MMTLP, and we can see that there were also similar allegations from the SEC at that time. So the question is, hopefully this attempt at a smokescreen will lead to discovery and also benefit all traders waiting for a resolution. So let's delve a little bit deeper into the actual allegations, and we can see here they brought this in the United States before the the Securities and Exchange Commission, and we can see here it's in the matter of the respondent being Meta Materials, aka Torchlight Energy Resources. So they're obviously looking at the actual merger itself, making findings and imposing also a cease and desist order. So in terms of the summary, we can see here the SEC are basically saying, in summary, on June the 2021, the respondent raised 137.5 million in an open market offering, engaged in a scheme to inflate the price of a stock and defraud investors. So very, very strong allegations here, through numerous materials and misstatements and omissions about the potential value of the stock dividend to be issued as part of the merger. And they are saying here the respondent sold 16.2 million shares during its ATM offering for tens of millions of dollars, more than it would have with absent in terms of efforts to inflate the stock price. So I'm not aware of this sale of 16.2 million shares that they are saying is made, and I think what they are referring to is this sale made by the company. So we're going to have a look at that shortly as well. So in terms of point number 2, they're stating here the respondent. When they talk about the respondent, I think they're talking here about Meta. So respondent artificially inflated the value of the common stock by structuring a merger between its predecessor entities, which we know was Torchlight Energy, specifically designed to cause a short squeeze, inverted commas, and looking at privately and selectively disseminated through paid consultants. So these consultants are something that we are not aware of, but the SEC are making these allegations. They're also referring to private conversations with investors and via social media messages, and I think they're going to later on refer to one of the meetings that George Palikaros had with an apparent group of Italian investors, which they're going to refer to, where there was a recording shared online. So they're saying here the respondent never disclosed its public filings an intent to cause a short squeeze. So I think that is certainly true. There was never any publication of that, but it waited to the last minute to announce the ATM offering to capitalize on what the respondent believed would be a short-term price inflation of its own stock. Then number 3, they are saying they made false and misleading statements about the preferred dividend, which obviously entitled holders to receive the net proceeds of the sale of the oil and gas assets. And they're saying here the CEO basically claimed the value of the preferred dividend would be between $1 and $20 per share. So they're talking about George Palikaros' statement there. In terms of valuation of the respondents' investment bankers, that's what the SEC are saying. They're saying the value range between 3 cents and 83 cents. So we can see here a significant difference between the $1 and $20 stated by George Palikaros. So I'd like to see any evidence that the SEC have of this valuation of 3 cents and 83 cents, because I would certainly be very interested in that, but they haven't presented that yet, so I'm assuming they will present that at any future proceedings. And in section 9, they've stated here that Berda explained his plan, use of the preferred dividend to pressure short sellers, to members of the Torchlight board of directors, its investments bankers, and several merger partners, including Palikaros. So to me, this doesn't make sense, because obviously the short sellers were obviously trapped in MMTLP. So MMTLP was not designed to be traded. So I'm not sure how they explain this, because we didn't have shorts covering at the time in TRCH when that was trading. And they're saying here that Berda explained to Palikaros how the deal structure would create a short squeeze, and the plan, which was obviously to play up the preferred share dividend to make sure the shorts understand their dilemma. So I'm not sure how this can be a plan when they never intended for MMTLP to trade. So I think what the SEC now need to state is who obviously created MMTLP, why did it come out, was it made tradable, and I think they need to make allegations of who created MMTLP and why it existed, because I think if Berda and Palikaros intended the short squeeze in MMTLP, well, surely they would be responsible for creation of it. So it certainly looks like a contradiction to me. They're talking about the short squeeze narrative, and then section 10, they stated that they have no reason to believe the shares would be the target of the short squeeze, and this was directly contradictory to the statement that the respondent, obviously Meta, and its executives made privately about the preferred dividend. So any private conversations that the SEC are alleging, I'm sure they need to present evidence of that, because if something is private, obviously it could be in recorded minutes. So I'm assuming they have these recorded minutes, in terms of making these allegations without the recording minutes, I think it would be absolutely baseless. So let's now move on to 17, where they're talking about that Italian investor call with George Palikaros, and they're stating here in this call, you notice that in terms of a quotation, if you notice, Torchlight stock is massively shorted. The deal is to set up not to give a cash dividend at closing. As a result, there is no physical way for the shorts to cover the stock when at the time to close, and we believe the close, it's called a short squeeze. So quotation there, it looks like from George Palikaros. And then they're saying a person on social media, June 7th, 2021, posted a screenshot showing the user recorded the Italian investor call. So I think we're all aware of this recording. 3 days later on Reddit, a user posted a partial audio recording of the Palikaros comments and included the plan for a short squeeze. So it seems to be something that the SEC are trying to put together, but I think it certainly seems very, very flaky and not certainly something that we would suggest is manipulative and an example of fraud. And in section 19, the same Palikaros and Berda also used Twitter to tout preferred dividend and short squeeze theory. After viewing the tweet, Palikaros texts Berda, advising caution. And these are the words they are saying, I don't think you should be sharing posts on the short squeeze yet, just my 2 cents. Once it happens, that's okay, as it is fact. So I think this statement in itself is not sufficient evidence to prove their allegations, but they are still including that. Then they're saying 6 days later, Palikaros tweeted the graphic of his shorts in flames, designed to promote the short squeeze theory and encourage investors to purchase Torchlight's common stock. So I think this was an error by George. I think although it's an error, it doesn't necessarily mean it's an example of fraud. And I think I did suggest that that was something that he should not have done, and I'm sure he would probably regret that. And then section 23, we can see here the allegation is that they both misrepresented the value of the preferred dividend. And they're saying here they encourage investors to hold Torchlight stock by giving false impression in public filings and statements that Torchlight would undertake commercially reasonable efforts to sell the oil and gas assets. And I think obviously if these were statements that made by John Berda and George Palikaros in terms of their efforts to sell, then I think that is something that is certainly true, because as far as I know, the company is still trying to sell the oil and gas assets. And I think if the allegation is that they were sold, then I think that would certainly be of concerns, but I don't think anybody ever said that the assets were sold. So if they are saying that, oh, they said they're trying to sell them, then I think that is still a true statement. So they're saying here, by referencing the net proceeds would be distributed to the preferred dividend holders, Palikaros provided a wholly unsupported per share value estimate, and we know about this estimate that it was between $1 and $20. Torchlight repeated the claim and said it was commercial reasonable efforts to sell oil and gas assets. So I don't doubt that they are trying to sell, but obviously we know that they have not yet sold. So section 27, we can say here, August 17, 2021, less than 60 days after the merger closed. In terms of the Meta board, we can see here Palikaros described the short squeeze to a select group of investors, made false and misleading statements about the efforts to sell the oil and gas assets. So I'd like to see recorded evidence and minutes of this allegation, because I haven't personally not seen this kind of statements made publicly. And also during the call, it states here Palikaros claimed Torchlight was speaking to the right potential buyers, and those buyers were top tier. Again, I've not had any information of this call. I don't think it's been made publicly available, but again, if the SEC has this, we would certainly like to see that. Number 30, they're saying Palikaros also mentioned on the Italian investor call, obviously the dividend 1 to 20. Well, that is something that we are aware of. And they're saying in section 32, the business development emailed Palikaros and other Meta leadership with regard to a complaint of this dividend range. And the VP plainly said the dividend was never going to be worth more than $1. So again, another allegation there. And moving on to section 44, one thing I'd like to highlight here is the day after Torchlight stock price increased dramatically in response to news of the record date, Torchlight executed a sales agreement with the investment bank to conduct an ATM offering. As a result of the offering, they sold 16.2 million shares of common stock, which is Torchlight, between June the 18th and June the 24th at an average price of $8.50 per share. So this is the allegation that they are making. So again, we will need to have substantiated evidence of this, and because in itself selling shares is not actually a crime, but obviously selling shares with inside information or obviously with fraud and manipulation is. So I think they would still need evidence of that, and that is up to a court or a jury and a judge to decide. So number 45, Torchlight stock reached its peak price around the T+2 date of June the 22nd, 2021, as Berda and Palikaros predicted, closing at around about $9.92 per share on June the 21st, and then $7 per share on June the 22nd. Then we know the price fell dramatically. Obviously, June the 25th, 2021, the preferred dividend payment and the stock closed at $4.95. The following Monday, Torchlight announced a 2-for-1 reverse stock split in terms of completion of the merger, with a new ticker symbol MMAT, and that closed at $3.98 after accounting for the reverse split. Then 46, what they're saying here is that on June the 18th, Torchlight sold 2 million shares on the first day of active selling on the ATM, and Berda texts Palikaros to state, we have 2 days to take advantage of the squeeze. So I'd like to know, if they took advantage of the squeeze, how many shares did they sell, and if so, how much did they profit? So that one, in terms of that information, I think that has not been shared by the SEC. So let's have a look at the violations. They're saying they violated some laws which they've identified, and the reason for that is basically they're saying they engaged in transactions, practice, course of business which operates or would be operate as fraud or deceit. So that's the very, very strong allegation there that they're making. And let's finish off by having a look at, obviously, in terms of the order, they are ordering that the respondent cease and desist from committing or causing any violations of any future violations of these laws. They're also saying that they should pay a civil penalty of $1 million. I'm presuming that is each. And they are obviously saying here, obviously, that George Palikaros and John Berda also have a right to contest the findings of the order, assert any defence to liability or remedy. And as far as I'm aware, and I think they are both responding to these by refuting the allegations. So in terms of the SEC, the questions are you using this as a smokescreen to prevent, obviously, the blue sheets? Are you using this as a smokescreen to get the information that the retail investors have been asking for Congress? It certainly seems to be very, very conveniently timed. And some of these allegations, although they are strong, I think the evidence has not been presented as of yet. So, as justice all over the world, everybody is presumed innocent until proven guilty or otherwise. Finally, I'd like to finish off by sharing news with regard to Ari Rubenstein. Apparently he has been located, so shout out here to Q Entertainment, who posted. To those wondering, I very briefly spoke with Ari Rubenstein. So he's also gone on to show on a piece of paper he's that MMTLP written down, and it looks like he was at the SEC meeting. And what Day to D has stated is MMTLP looks like he is alive and well. Hi, Ari. And this is the disappointing news with regard to Pete Sessions also at this meeting. And what Busy Brands has stated is, why can't Pete utter those 5 letters MMTLP, grow a pair? It's been 18 months. The public and retail investors want to know the questions you've sent that weasel named Ari Rubenstein. So we can see here, according to Marcos, he stated, so basically it looks like Pete Sessions and friends decided to send a letter to the SEC advocating for GTS securities on ticker size. So that absolutely obviously seems to be something that is something that the MMTLP community are not going to welcome. It also shows that Pete Sessions needs to identify on whose side is he. Is he on the side of the market makers, or is he on the side of retail investors? And finally, thank you very much for watching. Please stay tuned.